fiscal flash flood approaching.
Hello and welcome to today's Daily Blitz. Now this very evening, Donald Trump will be meeting with the 7 largest bankers of the US just to decide how they're going to manage to goose markets up and retain some kind of stability within the financial system. Also today, you've got US Treasury Secretary Mnuchin will be meeting with the members of the Senate to prepare a fiscal stimulus program. And this is just in the US, the world's largest economy, where the coronavirus doesn't appear to have hit nearly as hard as it has in other parts of the world. So what exactly are we going to expect elsewhere?
Yeah, so coronavirus hasn't really hit the US anywhere near as much as Europe so far, and so the stimulus response is really centering in Europe for the most part. We've got Germany planning a stimulus program as well. And then in an extraordinary move, we've got the Italians suspending mortgage payments in Italy. They've worked with the banks to implement this measure, so it's not a surprise to the banks. It's a complete shock to me that this is even possible, that a government can just legislate to break contractual obligations across the country for all mortgage borrowers, that they just don't have to repay their debts anymore. And of course, we've got the obvious economic lockdown in Italy with basically a curfew, and that's just Italy. So we can expect much more from the other countries around Europe as coronavirus continues its path across Europe.
Now, while we say that the coronavirus has not hit the US hard so far, that may be simply because they've not been testing people in anything like a lot of the other countries have been doing. So maybe when that does happen, we'll see some similarly extreme measures used to ensure some kind of stability.
That's what I'm worried about in all of this, actually, is that the figures might be more revealing who is testing for coronavirus instead of who has it. Because, of course, it's impossible to test everybody, blanket test everyone all the time. So the countries that are reporting higher rates of coronavirus might just be better at testing for it, and the countries that are not testing well and reporting lower rates are in for a surprise.
Now, I think in terms of the government response to this in general, I think while governments have been relatively constrained in their spending, certainly in places like the Eurozone, and certainly where there are political parties that were somewhat pro-austerity after the financial crisis, I think what coronavirus is going to do is effectively going to force fiscal stimulus to some degree throughout the developed world. And once that bridge has been crossed, it's going to be much, much easier to roll out much larger fiscal stimulus programs. And is that what you're referring to with a fiscal flash flood?
That's right. So the idea is a shock treatment that tries to get the economy going again. The question, of course, is whether they're in too much debt already for all of this to work, whether they're at the limit. The one option is to turn Japanese, basically. The debt doesn't matter that much. It's just you end up with a moribund economy and deflation and nothing much happening in your financial sector. Or you have a stimulus effort that fails and causes a financial crisis because we've got too much debt, and that risk is especially high in the Eurozone because of the shared currency and the rules that govern the Eurozone.
Here in the UK, we actually saw some of the UK government debt hit negative yield. So this is where investors are paying more than the debt itself. So they're paying, say, £101 for £100 in the future. So it does imply that there is certainly, if the UK Treasury wanted to, they would be able to try some kind of big fiscal expansion and borrow an awful lot of money for it. But it's whether or not, to what form that fiscal stimulus would take, whether or not this would be infrastructure or military spending or massive welfare rollout. What do you think we're going to see?
I'm not sure the UK government will be able to borrow the money to implement this stimulus because, as we saw last year, when European governments tried to borrow at negative rates, their rates spiked back up again, and the bond market wasn't willing to finance at negative rates. I think it's a big difference between trying to borrow money at a negative interest rate and having your bonds trade at negative rates in the market. We talked about the difference between the primary and the secondary market in an earlier video. I think that may play out in the UK as well.
So we should pay attention to the idea of a relaunch of quantitative easing, in which case it's the central bank that is effectively paying for the stimulus anyway, in which case politicians are just going to take the printing press for a ride and make as much money out of it as they possibly can.
And that's really where we're going with this video, is that this may be creating the window of opportunity for MMT. Now, whether it's official or not that it is MMT doesn't really matter. It will be in practice, where governments are being financed by central banks almost directly or even directly, and fiscal stimulus will basically be flooded with monetary policy.
Yeah, so we've seen this a little bit last year, where the Federal Reserve began expanding its balance sheet in order to finance repo operations. But effectively what was going on was the US Treasury was issuing short-term debt, and the Federal Reserve was buying it later that day, but it was still being intermediated by one other party who bought the debt first. But it was so close as almost not to matter.
It's keeping up appearances.
Exactly. But that sums up today. today's Daily Blitz. I hope you enjoyed it. Be sure to subscribe and click the notification bell down below, and we shall see you in the next one.